What do 8% interest rates mean for the home buyer today? This year, we're seeing interest rates we've not seen since the early 2000s, and we're on track to have one of our slowest years of housing units sold since 2008 at just over 4 million. First, how did we get here? Let's take a look back to 2020. We had that thing called the pandemic. So inflationary spending came about, low home interest rates came about, buyer demand was driving up home prices. It was a real thing. Let's say we're talking about a $600,000 house and you wanted to put an offer on it. Back then, you were going to compete with several different offers. It could have been 10, 20, 30, 40 offers on the same house. And oh, by the way, you'd likely have to waive that appraisal contingency, waive your inspection, likely pay over the asking price, which means more money out of pocket and less security in the buying process because you weren't able to get many of the checks and balances and due diligence things that we go through when we buy homes. Now, before I talk about the opportunity that this market, that's right, I said it, this market has, don't forget to subscribe to this channel for all the mortgage news and updates you need to know. All right, let's get into it. Fast forward to this year, it's a whole different game. We see the seller contributing towards the buyer's closing cost. We see more negotiation on the price. We see sellers accepting FHA and VA and down payment assistance programs, which was not the case back in 2020. We see the flexibility and the time. So now there's a coming together between the seller and the buyer and what they're mutually trying to achieve, not just that market that is 100% seller driven. So when we think about opportunity, having the ability to breathe a little bit and get in at a lower cost out of pocket because you're likely not paying over list price in many markets across the country today. And again, that just wasn't the case in that very competitive seller's market that we saw a couple of years ago. So the takeaway is you cannot go back and renegotiate a price after your house is closed. However, if you're purchasing in today's market with a higher interest rate, there may be a chance for you to refinance at some point in the future to drop that interest rate, to save on that monthly payment while purchasing in a more balanced real estate market. So you do have the ability to do all the things that you want and need to do when purchasing a home. So are interest rates higher than they've been in 20 years? Yep. Is it a little scary? Yep. Will home prices go up when rates come down? Oh yeah. So if you're ready to take advantage of this opportunity right now, click the link to schedule a strategy session with a KellyZtilowGroup mortgage advisor today. Let's talk about what your goals are and come together to put together a plan so you can see what it would look like if you were to buy today in today's market, taking advantage of the opportunity. And then if you were going to refinance at some point in the future when rates come down, what does that mean? What does that really mean to you every month in a dollars and cents type of scenario? Let's dig into that now because that will give you the intel you need to be able to make an educated buying decision today. Thank you so much for watching this channel, and please subscribe for more valuable mortgage education.